Happy New Year! The economy continued to improve through the end of the year as GDP expanded at a 4.1% rate, the fastest rate in 2 years and exceeding projection. Following right in line, the commercial real estate market continued to strengthen as well. Industrial vacancy rate decreased by 20 basis points during the fourth quarter to 8.3% as more than 5.2 million square feet of vacant space was absorbed. Since the market turned around, nearly 50 million square feet of vacant space has been removed from the market through leasing activity, user sales, and construction completions. Over the course of 2013, the vacancy rate dropped nearly a full percentage point and nearly 16.7 million square feet of space was absorbed, outpacing last year's tally of 14.6 million square feet and 2011's tally of 13.9 million square feet. Joining us today to discuss the industrial market in 2013 and his projections for 2014 is Mark Moran, Executive Vice President at NEI Hiffman.
We're finally seeing some rental rate increases in many of the major submarkets. We're seeing a reduction in a lot of the tenant concessions that have been given over the last several years, and we see this trend continuing as the market continues to improve. Longer-term leases are becoming more prevalent, a 7 to 10 year lease being a long-term scenario, whereas prior 3 years or less was more of the norm based on companies not being able to make decisions, a lot of uncertainty in the market. So we're seeing that change to the positive. The largest lease completed in fourth quarter of 2013 is an 898,000 square foot build-to-suit for lease completed in the Pinnacle Business Park for Pactiv, which is in Romeoville. Investment interest in the Chicago market on the industrial side continues to be strong. The challenge that we have is there just are not a lot of Class A packages that have hit the market. So there's certainly a demand and a pent-up demand for product in this area. It's just been difficult for companies either that want to get into the market or existing investors being able to buy additional product. I think there's a general sense of optimism for 2014, and I think speculative construction will continue. I think there's enough demand in the market to justify it. So I think both on the sale and the lease side, we see 2014 as being as good, if not better, than 2013.
Keep an eye out for our year-end market review and 2014 forecast to be released later this month.